Welcome back to Market on Close. It's time now for Options Corner, and I'm joined by Rick Ducat, lead market technician, to take a look at Netflix. What a pop we're seeing today, 14%. We went over the details as to why earlier. Investors are seemingly loving the move, Rick, to drop out of the Warner Brothers bidding war here. So just talk to us as far as what you're seeing compared to some of the others in the sector today.
Yeah, I mean, this was obviously a dramatic story. It was pretty interesting to follow. It seems like we're drawing to the conclusion now. Can't help but wonder if this could be a more of a Pyrrhic victory almost for Paramount. They've paid a very handsome price now, an inflated price really for Warner Brothers to the tune of over $111 billion, potentially here. And Warner Brothers hasn't exactly been doing great either. So kind of a question mark here going forward. Netflix, on the other hand, badly beaten up during previous month. Now they get to walk away scot-free with an extra $2.8 billion breakup fee here. So a pretty interesting situation here when we do consider this name. But Netflix and Paramount, two of the top movers in the S&P today when we look at this situation here. Not a lot of analyst activity that I've seen for Netflix based on this move today, but the reaction in the share prices has been enough to speak for itself, I guess I would say.
Yeah, the analysts are probably just sitting going, whew, okay, that's over, for now at least. No doubt we'll keep talking about this story, though. Just talk us through some of the technicals on what you're seeing here with this name, because obviously a pretty nice bounce, as we can see here.
Yeah, for sure. So when we look at our Netflix chart, we can see that we had this rather precipitous decline, starting with earnings from back in October, a big drop, and then that gave us our downward sloping trend line. That was pretty much the prevailing theme for the entire quarter. So then now, after our earnings event that we had more recently back in January, we hit some new lows near 75, handily taking out those previous low points here from the tariff news event shock previous in April near 82. Some other horizontal levels to consider now that we have progressed beyond some of these points. We can see 93, a repeated floor. That's around where we have held on so far today. We did dip below that on an intraday basis, but looking like we're probably going to close above it at this point here. Another repeated low and high point, 87, a low point before a gap, a high point during the January months, and then again just yesterday it was around where we saw our high of the day. To the upside, 103 stands out. This was a low point that we reached during our descent here during the past few months here. So you kind of try to pick out these notable highs and lows during this type of situation to help inform your trading decisions here. Now when we look at our moving averages, very quickly climbing upward once again. Our price pattern is a very narrow, very tight channel from which Netflix is moving to the upside here. Our 251-day EMA in orange here, our yearly EMA 99.54 is to the upside. We also have our quarterly 63-day EMA in gold here, 89.50. So about a 10-point range for our two more significant longer-term moving averages. The longer term, the moving average, the more noteworthy it is as a source of support or resistance because it takes more data than its shorter moving counterparts. They'll react more quickly, but they're less significant when they change. Another noteworthy thing is that we've progressed from the oversold area to the overbought area in the span of just a couple of weeks here. So a very rapid turnaround here. It just speaks to how quickly things can change in this field here. A piece of big fundamental news such as this can rewrite a story almost instantaneously here. So look for the crossover back below that overbought area for signs of potential slowdown on the RSI. Now our volume profile situation shows here we can see that that was the node that we crossed above yesterday here. That's around where we topped out, 83 to 86. Was that heavy trading area there? Then 90 to 98 is more where we are now. So a push above 98 opens the door then to recapture this smaller trading activity area from 103 to 107. So notice as well, very high volume spikes here. A volume spike being volume at least 50% beyond the 50-day simple moving average of volume. So that's our orange line here. You can see very, very far beyond that level here, suggesting very high conviction on the part of traders.
And talk us through the options activity that you're seeing on this name today.
For sure. So we can look at our next few months here of options activity, potential ranges. March 20th, 8.1% expected move, roughly right about here. So giving us a range to consider for that. In terms of today's activity, 2.6 million options contracts changing hands at the time I checked. So very heavy. Netflix is one of the most active symbols in the market. 78% roughly were calls, so very skewed toward that side. Our most important month in terms of open interest, our next monthly expiration in February, over 1 million contracts of open interest. That's in that month alone, more open interest than many symbols have in total here. The top strikes on the call side, 90, 100, and 110 in terms of open interest. On the put side, 80, 83, and 75 for that expiration month here. One notable trade as well, it was a spread, two separate trades, minus 90,000 August 21st, 105 calls, and minus 90,000 August 21st, 125 calls for a total net credit of over $69 million. So really a massive, staggering quantities in terms of both the volume and dollar amount.
Great stuff, Rick. Always appreciate your technical lens on all of this. Thank you so much. Have a wonderful weekend. That is Rick Ducat there over in Chicago.